Hello, traders. Good morning, good afternoon, and good evening to everyone out there. So, before I start with today's video, which is all about divergence in Forex, okay, I want to make a I want to make a short statement out there. There are a lot of scammers in this industry. Some can pose to be someone else so that they can scam a lot of you. So be careful. I would never contact you asking you for anything. I only have a channel here in YouTube whereby I create content, but I do not ask for money. I do not have signals. I do not do any of that. I just teach everything that's related to Forex. So anyone posing to be me, do not believe that and do not get scammed. So be really, really careful. So with that outside the way, if you're new here and you do not know who I am, my name is Nate, as you can see on the name of my channel. And I've been in the Forex trading game for over 4 years. This makes it the 5th year now, okay? And I have to say it has been a really, really great journey. I've learned a lot. And I never really had a mentor or paid for a course. All I had to learn was through YouTube and through trials and errors, doing things on my own, learning all that I've learned from YouTube and all of that cool stuff. Though I'm not saying that it's a way that will work for everybody, no. If taking a course helps you, then go for it. Besides, it will even help you a lot. You'll be saving a lot of your time in doing so. Okay, yeah. So if you're interested with learning about Forex or cryptocurrency trading, or if you want to know which are the best crypto airdrops that you can participate in, not necessarily having to do any sort of tasks like maybe going to YouTube channels, watching videos, following social media pages and all of that. All of that is outdated. In this channel, I teach you the very best way of participating into these airdrops, and you gain those coins instantly. All you have to do is just have a Trust Wallet application in your phone. And yeah, I will also be doing a video of how you can go around this when you have the Trust Wallet in your iPhone, because right now they have removed the dApps browser, okay, or the apps browser. Okay, so I will create a video about crypto airdrops and how you can go about that if you're using an iPhone and also if you're using the Android version. Okay, so with all that said, if this is what you're interested in, then please by all means consider subscribing, hitting that bell notification icon, because I'll be creating a lot of content for you guys, which I believe will help you a lot. And yeah, you do not want to miss any of that. And if you also like today's video, please don't forget to subscribe, hit that bell notification icon, and yeah, I'll see you in a lot of my other videos, guys. So with that said, let's jump into today's video. So today I plan to teach you guys about divergence. There is a strategy that I was kind of backtesting still. I'm still backtesting it actually, and I wanted to share it. I wanted to share my findings of how everything is. Well, I'm not an indicator trader. I just use this kind of strategy to look for divergence, because I see especially pairs like gold usually respect the divergence method, okay, or the divergence strategy. All right, so let me get started. First of all, we need to know what is divergence. Okay, so I searched for divergence in Forex, and this was what I found. Okay, so Forex divergence is defined as a case when the price of an asset is moving in the opposite direction of a technical indicator. Technical indicators are like oscillators, RSI, relative strength index. Okay, so yeah, I only use the relative strength index, or the RSI. So the explanation continues, such as an oscillator. For example, the asset price is moving up, but the oscillator line is moving in the opposite direction. The opposite situation is also known as divergence in Forex. So let me go into my into my charts and show you what that means. So this is the RSI. You can just leave it as it is. When you place it on your MetaTrader or on TradingView, you will see that it has the period of 14. I just kind of tricked mine a little bit to a period of 13. So this is how it is in any time frame that you're looking for divergence. If you want to sell, you'll need to see that the divergence is occurring on the top. And if it occurs on the low, then you need to be looking for buys. So on your, let me widen this. Okay, so as you can see, if it occurs on the top, you will also see that here, as you can see here, it's occurring in a slope, okay, in a way that it's going down, but here it's kind of a straight line, or it's going up a little bit. Whenever you see this, this is divergence, and all that you need to do, if it appears on the top, if you're using an oscillator or an RSI, then just know that you need to be looking for a sell. Okay, so how do you trade this? Whenever you have spotted this, you just wait for a bearish engulfing. And as you can see here, this was the this was the candle that I took just after it closed. I'm on the 1 minute, by the way. After it closed, I got in. Okay, and even though price continued going up, my stop loss was around 4 pips. As you can see, price went for maybe 2.5 or 3 pips, and then it reversed. Okay, we had another attempt here. So as you can see, price is going sideways, or if you put this trend line in a way that it's going a little bit of a straight line, but here it's going up, but again it appeared on the top, okay, which means you need to be looking for sales. So therefore you wait for that, you wait for these 2 points to meet, okay, this point and this point, and then this would be your entry candle. Boom, enter here, stop loss above these areas for around 2 or 3 pips, okay. And price went down, and so this is the buy side divergence. 2 points, you connect them, and this was the point. Now as you can see, this point was higher, but this point is lower, and if it happens like this, then therefore that means that price is going to rise. But again, you wait for a bullish engulfing, which occurred here. So after this, you take that buy to the upside, and you could have maybe gotten out of here, maybe 4 pips. Okay, yeah, you could have capitalized 4 pips on this one. Okay, and this is just the 1 minute. You can use this on the 5 minutes, but I'll show you how I kind of do this before I even look for my entries. Okay, you keep on doing the same thing here again, as you can see. Yeah, it happened on the top. Here we were having like some sort of a trend line to the upside, but here it was falling. So yeah, we take a sell after this. Boom, down. Okay, they keep on happening a lot. And when you see that maybe all of them are going the same way, you do not take those. You just look for those that are kind of different. If one point is lower and the other is higher, then here, if you see the 1 point is higher and the other is lower, this is divergence. So you get ready for a sell, you wait for a bearish engulfing. But if it's happening below, you wait for a bullish engulfing, and then when it closes, you enter. So let me go to the 5 minutes. So you should use this as after you have already kind of done your own analysis to kind of see where the market is heading, and kind of see where the market is heading and what opportunities you can take. Okay, let me go back. So maybe you wanted to catch all this. Yeah, here. Now with pairs like the GBP USD, these divergences usually occur really well during the London session. Okay, yeah, during the London session. So the very first position was here, this point and this point. Now let us draw a trend line here. So we had this first point connecting to this wick here. As you can see, this point is higher and this is lower. So these are the 2 points. But here, this point is lower and this point is higher, which means this is divergence. And when it happens lower, it means that price is going up, or it will go up soon. So what do? We put another line here. Boom. Connect the dots. What do we have? Divergence. So what do? We wait for this candle to close. When it closes, if you're on the 5 minutes, now after you've already spotted this divergence, you go to the 1 minute quickly. Go to the 1 minute. Let me move back. This is how I could have done it. Okay. You even have more divergence in here on the 1 minute. This, we have like an equal lows, okay? Here and here. Equal lows, but here we have this low is lower and we have some sort of a lower high. Sorry, a higher low. You can see divergence. So after this kind of forming, this is where you get in. So you could have entered here and then make sure that your stop loss is a little bit below the wick, maybe just 4 pips or 5 pips at least, just to be safe. But I would have just kept it there, 4.2 pips, okay? And then you can target the next point on the very top. All right. Yeah, so for around so price came back again. If you had already gotten out here, or if you are at break even, then this could have stopped you out, but still there is no problem. Okay. But even let's say maybe you are getting out on these areas here, you could have backed 10 pips on this one. This could have been your first trade. Even if you are at break even, it's still okay. But again, you wait for the second attempt. We know that there is a high possibility that we're going to have another one here. Okay, so let us try to meet these lows. We have this low and this low here. Okay, straight line. Okay, it's kind of a steep slope. Okay, so how could we have done this? No. There was another opportunity. Yeah, you could have even done it here. This is going sideways, but also this is kind of a steep slope. Sometimes it might not be really perfect, but yeah. Anyway, you could have waited after this candle and then you jump in. Okay, we also have this one whereby it was going a little bit down, but here it was kind of steep also. So maybe let's use this one here. So that point and this point here. Okay, but here you see that price is kind of okay, kind of in a straight line. If we adjust it a little bit, let me move this first so that I can adjust this. Okay, this is really steep. So what do? The same thing that we saw here, we can also wait for it here. So we wait for this, and then this would have been our candle. Okay, but as you can see, they are all about the same direction. So yeah, maybe let's go back. 5 minutes. There was an opportunity here whereby we could have caught a really good move. So as you can see, if you are using the 5 minutes, you could have gotten in after this candle closed, after this candle here, this candle. After it closed, you could have gotten in, but here you got in at the like the 50% of the candle, and then price just flew, went up. Now again, here is the other point. Price, in a way that it is creating this divergence. Okay. We have this tiny divergence here. In a way that we have a straight line here, but what do we have here? So come to your 5 minutes, look for these areas of divergence, and then you plot them. Sometimes on the 1 minute, you won't be able to spot them better. But as you can see, a straight line, but here we're having like a steep slope. Just like the same thing that happened here. Okay. Now this one, you could have bagged a really good percentage. You also had another one here at this area. I will show you, do not worry. No, I think it was maybe somewhere. Oh, yeah. I think it was GJ. Yeah, so this is GU. Anyway, let's continue. We are having an area here where we're having equal lows, but here we're having like a slope to the upside, higher lows. Okay, so let's go to the 1 minute and see how we could have caught this. Move back, back, back. Okay, as you can see, now all that we do, we adjust this a little bit here and here. Okay, as you can see now, it is even much clearer. So we wait for this second touch. Okay, either way, you could have taken the first point here if this was like this point and this point. The first entry here, when price came again, you could have taken it here. Either way, they were all good trades because your stop loss would have been below this area. Let's see if you entered here, your stop loss could be like 6 pips. Okay, and price never even got there. Price was ranging for a while before it went up. But let's say you were waiting for this other point, then you could have entered here, and there's your entry. Stop loss goes below there, 6 pips. Now in this you can target 20 to 30 pips. So let's go back to the 5 minutes and see where you could have been targeting this. Remember, here we are in some sort of a range, that's why we only targeted a few pips. Whenever we started seeing that price was having a hard time breaking above, just get out. Okay, so 30 pips. That's 37, guys, and price flew for 62 pips before it reversed. And this was also the analysis that I called like the previous day on Friday. I did an analysis on that one. And as you can see, with this divergence trading strategy, it helps you even to find these entries, to get in first, to get in fast, and even risk less. Let's say you're only risking 30 pips. Let's say you're only targeting 30 pips max. As you can see, that's a 5-to-1, risking 6 pips to make 30. Now, let's say you're a scalper like me. Maybe you have, or maybe even you're taking an FTMO challenge. Okay, if you're taking 100K FTMO challenge, if you're risking 1% on your account just from one trade alone, if you do a 10 standard lot on this, worst case scenario, if you lose this trade, if price goes against your 6 pips, then you'll take 100 times 6. You'll only be losing $600. Okay, which is just like 0.6 of your account. But if it goes in your direction, just take that 10 lots times 10, which is 100, times 30, which means we'll be bagging $3,000 on this just here. And how long did it take? And we're on the 5 minutes, guys. So you could have gotten in here 11:50 London time, okay? Since I'm like 2 hours ahead of London. So this in my time zone could have been like 13:50 or 1:50, okay? 1:50 p.m. afternoon, okay? During the London session. As you can see, we GU offers these really amazing trades during the London session, 30 pips here, okay? And you could have been in the money at 13:20, which in my time zone could have been at 15:20, around 3 p.m., 3:20 p.m. evening, okay? Which is really, really insane. Almost the London close. Could have been out. Yeah, so for around 3 hours or 2 hours and a half, made my money, stayed out of the markets. Even if you're having your own personal account, with this kind of trading, you can risk a good amount and make a really decent amount just off of this strategy. But obviously, first of all, you'll need to do your own analysis, like from the 4H, know your zones, see where the market is trending, because this works well if the market is trending. So as for here, I was looking to buy, and that's why I was looking for buy side divergence. Like here, I could have had a small buy for around 10 pips. My stop loss was 4 pips. And here, as you can see, if you are still holding this, you could have made 62 pips. Yeah. If you're taking a 100K FTMO challenge, just with this one trade, if you're using 10 standards, you could have made 3,000. You could have been up 3% on your challenge, okay? And that could have meant only 7% more to go. And if you're only targeting 30 pips per session, let's say you're only trading London and New York sessions, if you do this, then you only have like 3 trades to pass your challenge and only 2 to pass your verification. And if you keep on catching these trades as you are a funded trader, you keep on making even more each month. Yeah, it is really possible, but all you have to do is just stay patient, wait for these setups. So this is what you can do. Since you do not know when exactly these setups do occur, I suggest for GU, always try to look for them during the London session or before London open. Try to mark up your charts, try to look at your RSI to see where the market is. When you spot divergence on the 5 minutes or in the 15 minutes, just go to the 1 minute if you are using the 1 minute, or you can still use the 5 minutes. If you spot it, enter. Whenever you see a bullish engulfing, enter. No hesitation. The worst case scenario, it will take you out, but only at a very small loss. Even if you are risking a lot on your 1%, but only make sure that you are risking nothing more than 2%. Okay, even if you are taking an FTMO 100K challenge, at least I would say only risk a maximum of 2%, which means you can only enter maybe 20 lots. But if your stop loss is 6 pips, if price goes against you, then the worst case is you'll only be losing around $1,200 on this one setup. But if you're using 10 standards, then you'll only lose $600. But the profit is, if price goes in your way, if you are using 10 standards, you'll be making 3,000. If you are using 20 standards, you will be making 6,000. And that's 6% in one trade, just by trading smart. But you have to backtest this first. Do not just take trades just because you have to take them. Now let me find more examples on GJ and I'll share them with you guys here. Now, as you can see, GJ prints these setups really, really well. I think you can still find good setups during the London session, but even better during the New York session. Like here, New York session. This was London session, almost going to the end of London session. And then we had like this area here where price was failing to break above. And then if you look at your RSI, we had that divergence. You know that this it's going a little bit higher, but this is going in a steep slope down. So obviously, if you are trading based off of the 5 minutes, this is where you could have entered. But if you're on the 1 minute, you could have entered here. Let's go and see that. I did this all yesterday. I was kind of back testing this. As you can see, GJ gives you 30 pips easily. Okay, 30 pips easily. But for GJ, it's best to be trading it during New York session because it gives you the best setups. Okay, now as you can see, boom, this could have been your entry. Stop loss 5 pips. Really insane. And then see how many pips did price move? 31 pips, and even it went on. Started ranging a little bit here, but again, yeah, it is what it is. So only come into the markets maybe during the New York session and look at where price is. If it's in an area of some sort of a support or resistance, try to look for those divergences. And when you spot them, wait for that engulfing candle in that direction that you want to take the trade. Maybe on the 1 minute or 5 minute, and then you enter. Okay. Now I won't be showing you how to do your top-down analysis because I already did a video, but I will leave it anywhere up here to the left or to the right. That way you can go and check it out. Okay. Yeah, but this strategy works really, really well. And these were the strategy, and these were the trades you could have caught yesterday, actually. Yeah, this one London time 11:31, which in my time zone could have been at 13:31, at around 1 p.m. Okay, still London time here. And I think end of London time around this area and New York session. Boom. So this was the move up, and this move during the New York session corrected all this move to the upside. Beautiful. 31 pips here. Could have bagged 30 pips. If all you target is only 30 pips, you could have made it within a very short period of time. So your trade could have been executed at 14:50 if you're in London. Okay, but in my time zone, since I'm 2 hours ahead, it could have been at 16:50, 4 hours time. Sorry, in 24 hours mode. Okay, or at 2:50 p.m. Okay, and I could have been out at almost 5:27 p.m. in my time zone. But here it's around 3:27 p.m. Okay, so that's around 2 hours, I hope. No, 1 hour. Okay, you could have made this in 1 hour. Beautiful trade. All you have to do is just know which time frames you're going to trade in, and also which time zones are you going to use. Okay, so let me maybe go to another. Since I've already shown you GJ and GU, let's try to go to gold and see. Let's go on the 5 minutes. Now, gold is a little bit different, but it will even give you a lot of pips. It will give you a lot of pips. It will give you a lot of pips. But the only problem is you'll have to use somewhat of a bigger stop loss range because, as you can see, gold is really, really volatile. So let me try to look for divergence. Oh, nice. Here, this low and this. Now, as you can see, this was a slope to the upside. Actually, price was trending within this ascending channel. Okay, but as you can see, this here, this was low and this was a higher low. but this is a lower, this is a lower low, and this is a lower high. No, sorry, this is a this low is higher than this. Okay, yeah, so I'm really trying to confuse myself here. So let me put this here, as you guys have seen that. And now I will just leave this trend line here. As you can see, this is going up, but this is going down. So let's come here and look if we had some sort of bullish engulfing to the upside. Even here again. Let's just mark this at that point, that other point. Okay. Yeah, and so here it was just like this. So we enter after this, boom. And this is just the 5 minutes, guys. Enter there, below the zone for around 16 pips. Okay, it is gold, so you just have to be okay with it. Okay, but the worst case scenario, 16 pips, if you are using a 0.01, you're only risking $1.65. $1.65. Now on gold, risking 16 pips, and you had no drawdown. After the trade was executed, price just went on flying. Now on this one, you can even target 50 pips. As you can see, it went for, let's say you are targeting this high. Since price was in this ascending channel, going higher is guaranteed. As you can see, if you're targeting these highs here, it could have given you 64 pips. You just take this number here, 646, you divide it by 10, okay, which will give you like 64 pips. Okay, so 64 pips for, if you're using a 0.01, that could have been like $6.46. As you guys can see, this is really insane. And that's 3-to-1 trade, almost a 4-to-1. But if you wanted to hold this trade, let's see how much it could have given you. Maybe if you're looking to hold it till when it went to touch the top of this ascending channel. Maybe you only wanted to get out when price reached here. That could have given you around 212 pips. Now that's a 12-to-1, guys. And I haven't used any institutional trading methods here. This is just using the divergence. This method is really, really powerful, but you have to backtest it first. Do your top-down analysis from the 4H, know where the market is going, find your key zones, and then after that, go to the 5 minutes. Put in your RSI in there and start looking for these areas of divergence. If price is creating a higher low, if you want to buy, look at divergence. See if price is diverging like this, okay, or like this, and then look for your buys. If you spot them, man, no questions asked. Wait for that bullish engulfing and then buy. If you're even a swing trader, you can even swing gold just on this alone. And if you are taking an FTMO challenge, you could have just passed just on this one trade. Now just tell me 212 pips if you're using a 10 standard. If it's just one position, how much you could have made. The worst case scenario, you could have only lost like so 16 pips, that would have been like 1,600. Yeah, $1,600. But the great thing is, if you take 212 times 100, wow. Let me do my calculation in this one. These numbers are really huge. Let me do the calculation quickly, and then I'll tell you how much you'll make. So if you take 100 times 212, yeah. Wow, that could have given you $21,200. which is really insane. You could have passed your FTMO just on one setup, one trade alone. Now let's see how long this took. So you got in at around 11th August at 2 a.m. Okay, which if it's 2 hours ahead in my time zone, that could have been at 4 a.m. Okay, yeah, so how, and I could have been out of this trade during maybe a few hours later. No, yeah, hours later during maybe the London close or heading to the New York Open. Okay, I could have bagged 212 pips just on this. And if you kept on holding, wow, you can see it went for long, a very long move. But if you're only looking to get out here, this is what you could have made on this. Yeah, so you could have entered at 17.25, 5:30, and you could have gotten out at 17.46. Yep. And that's just a 1.23% increase of price. This is really insane. So you're only risking 16 pips on this, but you are making 212. Because if you take this, all this number, okay, 2,128 divided by 10, you'll get 212, which is the pips. Okay, but here, I always look at this like the dollar value. Okay, so it's around $21 if you are using a 0.01 risk to reward. No, a 0.01 lot size, micro lot. Okay, yeah, so this divergence thing works even on commodities like gold. It works on forex pairs. Now I will take one last example. I will do it on crypto. Let's maybe go to BTC USD and see if this thing also works on crypto. Wow. So we have this move, and then after that, price just went up. First of all, you could have caught this. So we had one here, and when was this? Here. And then price just went up. So this is how you could have caught a lot of trades. Let's say you're trading Binance futures. You could have caught a lot of moves on this. And as you know, if you're trading futures, wow, you can be bagging a lot of profits. Okay, let's meet these equal lows. Okay, this. But here, as you can see, it's like a steep slope going up. So let us meet these also. Boom. Okay, so it's going up. So as we know, we're only waiting for a bullish engulfing. Even here, if you just wanted to use this, maybe just catch it, only catch this move here. Could have still just used this. You could have caught the move here, maybe the 50% of this. If you go to the 1 minute, let's see if we could have bagged a good amount. Let's go back. Let's go back. I do not know if it will allow me since I'm using a free trading view. Oh yeah, nice. Okay, as you can see, we just adjust it a little bit. Yeah, this was the point. Let's say you are only targeting this high here because obviously we are going down, so it's not really ideal to take a counter trend trade. So the very first position, you could have taken it here maybe, or here. Let's say that we only took this trade after this bullish engulfing. How much could you have made? Okay. And if you're targeting this area on the very top, that's almost a 1 to 2. That's a 1.58. Let's see if we could have made a 1 to 2. Yeah, there. As you can see, gave you a 1 to 2 clearly, and then price reversed. If you are at break even, it could have stopped you out here, which is no problem. But you made around 0.77% on this. If you are having some really good money into your Binance futures account, or if you are trading crypto futures and you invested a good amount, you could have bagged a really serious profit on this move just itself, trading on the 1 minute, guys. Okay. Yeah. Now let me move back to here. Okay. You could have had another position here as well. Okay. Let's adjust this here. Now let's go and see how you could have caught this on the 1 minute. This is really insane, guys. You can use this on any assets that you are trading, even indices. It's really powerful. So here, you wait for a bullish engulfing or a bullish pin bar maybe. So yeah, maybe you could have taken it here after this pin bar. Okay. Okay, maybe here. Stop loss goes below this zone. Then maybe you shoot for a 1 to 2 again, maybe a 1 to 3 in the money. As you guys can see, in the money. You could have bagged 1.19% on this move alone. And it's on the 1 minute. Of course, you could have had a little bit of a drawdown here, but again, after some few minutes, after 2 minutes, price just flew and went your way. Okay. Yeah. Let's go back and see other examples here. Okay. You could have caught this move to the upside. Okay. You could have caught this reversal or this pullback. Okay. So I couldn't have taken it here because price was just kind of ranging. Yeah, but after this pin bar here, so as you can see, some other pairs do not necessarily maybe create engulfing candles like the gold. Most likely it will only create these pin bars as we have seen most times. See? Can I get a 2 to 1 here? Let's say maybe we squeeze our stop loss a little bit. Yeah, it could have given us a 2 to 1 here. Could have been out of this at a 1.23. Wow, really insane. This move here, equals. Here again, you could have caught this reversal. Guys, I'm telling you, this happens every day. If you want, you can even draw it, put your trend lines from the body of the wicks. But here, as you can see, it was a straight line. So if you're meeting these 2 points, this area here, as you can see, boom, you get in after this candle. This is your buy there. Stop loss just below. Look at how much you are risking. And price never even got into a drawdown. Price just started flying. Now here is where you could have been holding this trade. Maybe if you wanted to get out here, if you saw that price has already taken out this side, then you just keep on holding. Get out on these highs. for around 3.67%. See the risk to reward 1 to 11.19. Really insane. And price kept on growing, as you guys can see. If you wanted to keep on holding, that's all up to you, but yeah, do not be greedy, guys. This strategy works really well. You can use it as a day trader, and you can also use it as a scalper. Really, really effective if you're a scalper and looking for these sniper entries. And yeah, even if you have a $10 account, just by trading this way, you can grow that, but you have to stick to proper risk management. Let's say you only start with a 0.01 and only trade pairs like maybe Euro USD, those that have a little volume in them, which do not move a whole lot. Okay, which do not move a whole lot, and yeah, maybe create some really massive wicks which can stop you out. Because on Euro USD, a stop loss that we use like maybe 6 pips on GU can be like 3 pips on Euro USD, or maybe even 1 pip, which is really insane. So you can have a really, really amazing risk to reward. But when it comes to Euro USD, since it doesn't move that much, I think you should only be targeting at least only 20 pips, 20 to 15 pips, 15 to 20 pips, yeah. And that way you'll be able to grow your amount. And let's say if you have a $10 account, if you're using a 0.02, then you'll be making double. Let's say if you only target 10 pips, then that would mean you're making $2 per trade. And always remember, guys, when price goes in your way, if maybe you make a 1-to-1 or at least a 1-to-2, since you're using sniper entries, break even on those trades, because you do not want to give money back, especially your investment to the markets. Okay, break even as quick as possible. These setups do happen a lot. Even if you get stopped out, it's not a worry. You'll always find more great opportunities. Okay, but always remember, trade this with the direction of the market. And when you see maybe prices approaching an area whereby it's some sort of a support, then try to look for those buy side divergence, because there is a high possibility that the market will reverse. Like here, it started creating like this descending channel, which makes you know, okay, we're about to reverse. And as you can see, after this divergence, boom, price just flew up. And if you had caught this, if you're trading futures and you risked a good amount, wow, you could have bagged a serious amount of profit. Just like I showed you guys on that gold setup, just within 1 hour, I think, you could have made some really insane profits. Let me go back here. This area, you could have made around 212 pips. If you use 10 standards on this, you could have made 21,000 plus dollars. You could have more than passed the challenge. Okay, yeah. So it's all about you being patient, taking the right entries. If you're not ready for trading gold, then you can just trade other pairs. This method works for all the pairs. But remember, do your own analysis first, your top-down analysis, maybe from the foreheads to identify where the market is going, the overall structure, mark your key levels, okay? If you want to even scalp, know where you're getting in and where you're getting out, okay? You do not want to be greedy with this. This can help you a lot, but for me, since I'm a scalper, at least on average, I'll only be targeting 30 pips on pairs like GJ, okay, and 20 pips on pairs like GU, because sometimes GU won't give you 30 pips, all right, but GJ most definitely. But gold, it can give you 60 pips and more, as we have seen it here, and especially if it's in some sort of a channel, then best believe that it will give you more than all that amount of pips. Yeah, guys, so that was it. Thank you very much for watching. Sorry for making the video too long. If you like today's content, please don't forget to subscribe, hit that bell notification icon, like this video, share it with your friends so that they can get this amazing content. And I'll be dropping more of this content soon. If you want me to maybe make more examples about this divergence thing, then you guys will just let me know. And always remember, don't get scammed. This business has a lot of scammers all throughout, so be really, really careful out there. Do not send your money to anyone you do not know, or even if they ask you to send them crypto, do not do that. Be smart. Okay, you can still make your money with trading on your own. Do not ask people to trade for you. Okay, it's really risky. Better knowing that you lost an amount just because you risked it on your own than giving someone your own hard-earned money and then they blow it. Okay, so be really, really careful. Yeah, so that was it. Thank you guys for watching, and have a nice Saturday.